Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London, and these are the stories that set your agenda. Stocks in Asia gain for a third day. The yen rallies as Japan's finance minister leaves the door open for intervention. Gold hits its 50th daily record this year. Oil steady as President Trump warns Venezuela's Nicolas Maduro not to play tough, but stops short of calling for his removal. Plus, Novo Nordisk surges after it wins U.S. approval to sell a pill version of its blockbuster weight loss drug, Wegovy. Happy Tuesday morning here. Looking at the futures across Europe, not really doing a whole lot. Euro Stoxx 50 futures dead flat this morning, unchanged after a slightly darker session yesterday for the European stocks. FTSE 100 futures down about 1/8 of a percentage point this morning. S&P giving back just ever so slightly some of the gains that we saw yesterday and Friday, but basically let's call it flat for the S&P futures and NASDAQ futures, both of which did reasonably well in yesterday's session. Going cross-asset, a lot of focus this morning on the yen after our interview with the Japanese finance minister, saying that the Japanese government has a free hand to play in the currency market against speculators. That was after we saw a BOJ rate hike that actually caused the yen to decline. And so we're seeing yen strength now for 2 days, down about 0.5 of a percentage point. This morning, Brent crude has steadied a little bit after that action we saw off of the border, off of the coast of Venezuela. Gold, unflaggable this morning. Again, up almost 1 percentage point, adding to the gains yesterday. We're talking about 50 record for gold throughout the year. And platinum also. We don't get a lot of platinum action on the board this morning. 1 percentage point higher this morning, seeing it across the commodity complex. Let's see how the Asian markets are faring this morning with Winnie Su in Taipei. Winnie.
Yeah, so we do see some modest gains when it comes to the Asian stocks. In fact, the benchmark is rising for a third day. So today, mainly that's being led by the financial sector, with Japanese banks rising, specifically on further expectation for the Bank of Japan to raise rates further. Now, we are also closely watching the Chinese stocks because the onshore benchmark CSI 300 also rising for a third day, despite a downgrade from Citi to neutral on the earnings revision, and also expectation for a weaker macro outlook to continue. And that strength in stocks also pushed the yuan higher to now still around that 14-month high and hovering around that 7 levels that we're closely watching. Now, we also just want to take a closer look into that divergence between the performance when it comes to the onshore and offshore Chinese stocks, because that is quite a reversal from what we've been seeing from earlier this year, where we saw offshore stocks really leading gains because of that DeepSeek optimism. But that has really faded a little bit with that tech valuation concerns. On the other hand, you really see that onshore stocks picking up these momentum, especially with these successful IPOs on the mainland market, with more threats. And even last week, we had Meta X. So that has really revived the optimism in terms of the AI strength when it comes to the Chinese market.
Yeah, and Winnie, a lot of attention on the currency market, specifically attention on the yen, and that's in large part due to our interview that we had a little bit earlier. What do we hear there?
Yeah, exactly. That is quite a swing when it comes to the moves of the yen, right? Because today we are seeing that rebound in the Japanese yen, where we're looking at about 0.7% gains there. And now I believe hovering around that 156 level against the dollar. And that rebound, as you mentioned, has come from Satsuki Katayama, who is Japan's finance minister, had that strongest verbal warning against the moves in the currency. And she is saying that to our exclusive interview from Bloomberg that the government pretty much has that free hand in terms of kind of intervening into the market if we see moves that goes against the fundamentals. And that's exactly what we saw on Friday, because we did see the yen weakening past that 157 levels on Friday after the Bank of Japan raised rates. And that is mainly due to traders not seeing much of a hawkish move, or pretty much not seeing a lot of clarity when it comes to the further moves from the Bank of Japan, and hence that weakening trend really caught investors and also authorities by surprise. And remember, previously when the Ministry of Finance intervened, it used to be around that 160 levels, and that's still the level that we're closely watching in terms of intervention risks.
Well, Winnie Sue, thank you so much for that in Taipei. And let's get more on those comments from Japan's finance minister that has issued her strongest warning yet to currency speculators, telling Bloomberg exclusively that officials have a free hand to take action.
為替の状況っていうのは必ずしも
Foreign exchange markets don't move only on interest rates or rate differentials. Especially toward the end of the year, around Christmas, trading tends to get thin, and many factors can drive the yen's moves. But the yen's sharp, very short-term movement right as the BOJ governor began his press conference last Friday, that was clearly not in line with fundamentals, but rather speculative. Against such moves, we have made clear that we will take bold action, as stated in the Japan-U.S. finance minister's joint statement.
Now that the Bank of Japan has moved to raise interest rates, the next focus is clearly on whether the government will step in with foreign exchange intervention. How do you see it?
We have
an agreement with the United States that allows us to intervene whenever the yen makes an excessive move. That means we have a free hand.
In the past, a finance official has called a 10 yen move in a little more than a month excessive. So what kind of time frame and magnitude would you consider a sharp or disorderly move? Is there any benchmark you use to assess that?
I can't say definitively whether there's a benchmark or not. I worked closely with currency chiefs during my 20 years at the finance ministry, and I've stayed in close touch with many of those who came after I left. Each situation is different, so it would be wrong to expect the same pattern every time.
Trading tends to thin out around the year-end and New Year period. Is it fair to say that the authorities are fully prepared to respond?
We're always ready to act. That goes without saying.
When it comes to a question of a certain degree of fiscal discipline, there are various ways to interpret that. For example, how much the government relies on bond issuance or how much JGBs it'll issue. Could you share a bit more on how you're thinking about these points?
I
can't give you specific numbers, but even after the supplementary budget was passed, we made it clear that the total amount of government bond issuance, which, after all, is what puts pressure on the market, did not increase. At this time, we're talking about the initial budget for fiscal year 2026. We're confident that it won't be something that places an undue burden on the market either.
There are concerns in the market that Japan's fiscal position may be deteriorating. What message would you like to send in response to those concerns?
By switching to active fiscal policy, we knew before we started that in the first fiscal year, some of the finance numbers would deteriorate. But that isn't the problem. We've spent 10, 20, even 30 years in a situation where economic growth barely picked up no matter what we did. There's no point in just doing the same things as before. We need to make a decisive shift, to concentrate resources and boost our growth potential. I believe we'll see a strong pickup in investment next year. And if you look at projected tax revenues for next year and the year after, I think what looks like fiscal deterioration now will prove to be only temporary.
Japan's finance minister speaking there exclusively with Bloomberg. From the currency market to the commodities market, gold and silver keep hitting record highs amid geopolitical tension and prospects for more U.S. rate cuts. In 2025, silver has rallied 140%. Gold today hits its 50th record of the year. Here to shine some light on the metal trade is Bloomberg's metals and mining reporter Martin Ritchie. Martin, gold 70% this year. Have we reached max gold here, or do we have more to run?
Very good question. It has been an extraordinary year for gold. I think we counted today, there's been 50 days this year where gold has set a new record high. So it's been a fairly steady climb, and it's been resurgent again after a little dip in the last month. We're now close to 4,500. As to whether this continues, look, I think the the kind of balance of opinion, if we sort of distill everyone we speak to, is that gold still looks strong into next year, and this is underpinned by, as you said, the expectations of more monetary easing, continued sort of, I guess what you call sort of fracturing of how people think about the global economy. We talk about the debasement trade with people feeling less committed to sovereign bonds and currencies, which is driving people to precious metals. And then we've got the central banks buying a lot of gold as well. And on top of that, gold's not like a huge market. If you look at the number of exchange-traded funds holding gold, if you look at the reserves there, the volumes are still relatively small. It would take only, a fairly small proportion of total private investment funds flowing into there to sort of ratchet up the prices even more. So I think the balance of opinion that we speak to, anyway, in the certainly for the short-term future, is still fairly bullish.
And Martin, is that the same story across the commodity complex for precious metals? I mean, we're seeing copper's had big gains this year. Silver's doing very well. Is there something else underpinning, for example, the copper trade?
I would actually make a pretty clear distinction between the precious metals and the rest. If you take copper, for example, demand's actually been pretty soft this year. Even while it's racking up these big gains, because there's some quite kind of esoteric factors in play there. A lot of metal being shipped to the US to front-run potential tariffs next year, which is sort of giving the perception of a tighter market elsewhere. That could easily kind of peter out towards into next year. And there have been warnings that that you can't really rely on a rally that's only supply driven. You also need that demand to come through. And yes, demand for copper is growing, but generally it's not as powerful as we've seen in previous years.
Well, Martin Ritchie, thank you so much for your time this morning. I'm sure you'll be staying on your toes over the next couple of days and weeks and into 26, looking at all these metal trades going ahead. Now, let's get some data a little bit later today, 8 a.m. UK time. Spain, final third quarter GDP, PPI inflation for the month of November as well. We will get also later this afternoon at 1:30 p.m. that delayed U.S. third quarter GDP figure. Watching that very closely a little bit later this afternoon. And also at the same time in Canada, we're going to get the October GDP number. So a lot of growth figures to look ahead to a little bit later in the day. And you can get a roundup of all the stories you need to know and get your day going. In today's edition of Daybreak, it's all about Novo Nordisk getting approval to sell their weight loss pill in the U.S. ADRs up about 10% in the after hours in U.S. trade. We'll be watching that very closely as the market opens here in Europe. Gold, the unstoppable rally. We were just speaking about that with Martin Ritchie. 50 different record highs this year alone on the days of trading. And Trump telling defense firms to spend more on weapons. That'll be some of the sort of key stories there for Bloomberg Daybreak Europe. Terminal subscribers can go to DAYBGO to sign up. But up next, the Bitcoin breakdown. We'll be diving deep into the market and looking at the rise and fall of Bitcoin in 2025 and what to expect next year. That's next, and this is Bloomberg.
To see price actually slide this year on Bitcoin and generally in crypto markets. People are talking about the cycles, of course, of the crypto markets. But my view on capital markets and Bitcoin markets is always a long-term view. I have no doubt that this is a correction eventually into higher prices in Bitcoin and into the transition of more than $100 trillion becoming digital assets over the next 20 years.
When we look at where we are a year from now, it's been overall very positive for the space, and we've seen much more regulatory clarity coming out of this. And I think getting into next year, we're past a point of no return when it comes to regulation and institutions interacting with crypto markets.
Past a point of no return. Some of the views from our guests on volatility in the crypto space we've been seeing over the last couple of months. But Bitcoin really sprinted into 2025 full of potential. But since reaching that all-time high back in October, the largest cryptocurrency remains fragile, with traders sort of revamping their approaches heading into 2026. For more, let's bring in crypto market reporter at Bloomberg, Siddhartha Shukla. Thank you so much, Siddhartha, for joining us this morning. It's been a wild ride for Bitcoin this year. I think that's a pretty fair assessment. What did we learn about crypto and Bitcoin in 2025?
Yes, Oliver, thanks a lot for having me. Absolutely. This has been a very interesting year. Certainly, this has been different from the past rallies that we have seen, because Bitcoin started off on a very positive and strong note. We've seen the rapid institutionalization of the space. Investors have poured in more than $21 billion in the spot Bitcoin ETFs. In fact, the kind of regulatory clarity and acceptance that we have seen, it's unprecedented in the space. In fact, Bitcoin has found its biggest backer in US President Donald Trump as well. So starting off the year, we had all the tailwinds that the sector was demanding for years, even in fact more. But come October, we saw that the token hit an all-time high, but it was also a reminder that despite the institutionalization of the space, the market structure remains very fragile, right? In a matter of hours, on October 10th, we saw $19 billion worth of liquidations. And since then, more than $1 trillion in market value has been erased across tokens, and the market hasn't recovered since. In fact, Bitcoin hasn't really lived up to its reputation of digital gold. As you can see, gold is, I think, above 70% this year, on track for its best year since 1979, whereas Bitcoin is on track to end the year in red, which is different from the past cycles because, like, for example, in 2022, we saw that the collapse of Sam Bankman-Fried's FTX, the collapse of Terra Luna, they were the catalysts for the sell-off, right? But this year, the token and the sector had all the tailwinds it ever demanded for, but a fragile market structure led to the drawdown that we are in right now.
Well, that's a good assessment of where we've been kind of in 2025 and where we are going into 2026. Give us a bit of a preview for what you're looking at going into next year for stablecoins. What will be driving the action there?
Certainly, yeah. So 2026 will be quite an interesting year because we saw that the Genius Act passed in the US earlier this year, and that has led to a phenomenal growth in stablecoin adoption and usage across the world. One of the trends that we have our eyes on is how the broader FX market also evolves around stablecoins. Like, for example, at this stage, the total market circulation of stablecoins is above $300 billion, out of which 99% are denominated in US dollars, right? So we don't have a vibrant stablecoin market for other fiat currencies, whereas the expectation is that going into 2026, we should see more jurisdictions come out with regulatory clarity around stablecoins, and hence we should see more fiat currencies also adopting this stablecoin wrapper. And people are expecting that, we should see quite the growth of more like a parallel 24/7 FX market on stablecoin blockchain rails in 2026.
Well, Siddhartha, thank you so much for that roundup and looking ahead into the year ahead for cryptocurrency. That's Bloomberg's crypto market reporter, Siddhartha Shukla. Thank you so much for your time this morning. Coming up, Bank of America says the AI effect is kicking in, and you'll feel it even more in the economy next year. More from our interview with CEO Brian Moynihan. That's next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Bank of America CEO Brian Moynihan says the U.S. economy will be strong next year due, in part, to companies ramping up their AI investments. He spoke to Bloomberg about what he sees as AI's growing economic benefits.
the AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at customer or client spending, like us spending on AI, that's higher than it was last year. But frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer. And you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
You have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say it in a 4.5%, which is very consistent with a very solid growing economy. In the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third of American income people in the Bank of America customer base, we do see differences, i.e. the higher income and middle income are growing faster. But even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, 40-year, it's 5 and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. Then you had the pandemic and it retightened. And so it's normalizing, but we feel good about all that, and the consumer's in pretty good shape.
Bank of America CEO Brian Moynihan speaking to Bloomberg's Wall Street Week with David Weston. Now, let's get to some other stories making some news. Alphabet shares closed higher after the company said it's buying clean energy developer Intersect Power. The move will allow Alphabet to expand its AI data center footprint. Aging U.S. grids are struggling to meet power demand that's booming for the first time in decades, thanks in part to artificial intelligence. Bloomberg has learned that the U.S. government is investigating whether a Singaporean firm, Megaspeed, has smuggled NVIDIA chips into China, which would be a major breach of curbs imposed to limit Beijing's AI and military prowess. Megaspeed, which is now Southeast Asia's biggest buyer of NVIDIA chips, denies any wrongdoing and says it abides by all regulations from the United States and elsewhere relevant to its operations. And Larry Ellison is throwing his personal fortune behind Paramount's bid for Warner Brothers, providing an irrevocable personal guarantee of about $40 billion. The aim is to give his son David the edge in the takeover battle with Netflix. The Warner Brothers board has previously urged shareholders to reject Paramount's bid, but says it's now evaluating the amended offer. Coming up, the U.S. president announces a new class of warship named after himself. More on the so-called Golden Fleet next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Oliver Crook in London. These are the stories that set your agenda. Stocks in Asia gain for a third day. The yen rallies as Japan's finance minister tells us that the door is open for intervention. Gold hits its 50th daily record of the year. Oil steady as President Trump warns Venezuela's Nicolas Maduro not to play tough, but stops short of calling for his removal. Plus, Novo Nordisk surges after it wins U.S. approval to sell a pill version of its blockbuster weight loss drug, Wegovy. Let's get into the futures this morning as we head into the session for Tuesday morning. As you can see across the board there, a very slight bit of red. Euro Stoxx 50 futures basically dead flat, catching a little bit of a sell, but not a huge amount. FTSE 100 futures down about 0.1% at about 9,885. S&P futures after two really strong sessions in the United States on Friday and Monday down about 10 basis points there. And the NASDAQ 100 futures down about the same after a fairly strong session yesterday. Going to the cross-asset board, the picture across different asset classes, as we were mentioning, the yen there gaining some strength this morning against the U.S. dollar. Dollar-yen down about 0.6%. Brent crude basically steady this morning after most of the action yesterday moved through the market after those headlines from the United States moving on some of that Venezuelan crude and some of those ships off of the coast. Gold still powering forward, up for another record, the 50th daily record of the year, and MSCI World up just a hair there, just a couple points away from an all-time record high for global stocks. The U.S. President Donald Trump has warned the Venezuelan president not to challenge the United States. At a press conference, the United States president was also asked what he plans to do with the oil tankers and cargo seized during the continuing blockade of Venezuela.
The United States seized 1.9 million barrels of oil on December 10th.
We're going to keep it. We're keeping.
Where's it? Are we going to sell it or put it in the strategic?
Maybe we'll sell it. Maybe we'll keep it. Maybe we'll use it in the strategic reserves. We're keeping it. We're keeping the ships also.
A lot to unpack there, and we're joined now by Brian Fowler from Bloomberg to help us sort of through some of the things we heard from the president yesterday in Tokyo. There is Brian. So listen, President Trump avoided saying whether he wanted to overthrow Maduro. What is the latest with the U.S. blockade of Venezuela?
Yeah, so this U.S. campaign in the Caribbean continues to evolve. It started, of course, as an anti-drug trafficking operation and has now become something a little bit more amorphous. The U.S. over the weekend boarded a second vessel, a Panamanian flagged ship that had recently loaded Venezuelan oil. Apparently, it had turned off its transponder. So that's been boarded. And the U.S. is also currently in pursuit of a third ship, the Bella 1, which it has determined is not flying a valid national flag. That ship has resisted efforts, all calls to stop, and a pursuit is underway. And as we had heard earlier, Trump is saying that he's going to keep the oil. He's also threatening President Maduro not to fight back. If he fights back, he will never be able to fight back again. Trump has stopped short of saying that this is all about regime change, but people in his cabinet have been a lot more clear on that. Homeland Security Secretary Kristi Noem said that this is about much more than just seizing the oil. He has to be gone, she said. So all these actions, they've been criticized at home and abroad. China, which is the biggest importer of Venezuelan oil, has criticized the actions as illegal. And then at home, Kentucky Senator Rand Paul has said this looks like a prelude to war.
Yeah, and we got some sort of immediate headlines there for what is going on off the coast of Venezuela, but there was also some announcement about much longer sort of strategic ambitions for the warships of the United States. What did the president have to say about that?
Well, I mean, he's announced a new class of battleship that's named after him. They've even got the name of the first vessel, which is called the USS Defiant, which seems, I'm sure he named personally, it sounds like. But this is all about advancing the capabilities of the U.S. Navy. This new class of battleship apparently would be firing laser beams at targets, and it's meant to make the whole Navy much more efficient, is what Trump said.
Well, Bloomberg's Brian Fowler, thank you so much for that. The update, important update there off the coast of Venezuela and everything that we're watching long term for the U.S. military. Now, Novo Nordisk U.S. listed shares jumping in late trading after it secured FDA approval for a pill version of its weight loss jab, Wegovy. The pill is expected to launch in the U.S. in January. Let's get more from Bloomberg's pharma reporter Amber Tong. Amber, walk us through the significance of this. We've had, of course, the injection for quite some time. Why is a pill so important?
Yeah, Oliver, this is really something that many people have been waiting for a long time. As you said, Wegovy and Novo Nordisk diabetes drug Ozempic, these are huge. They both contain the same active ingredient, semaglutide, and they belong to this blockbuster GLP-1 class that has become really multi-billion-dollar drugs. And Novo Nordisk also has a pill form of semaglutide that's already approved for diabetes. But this new approval really completes the quartet. This is the first of its kind approval for an oral GLP-1 pill that's approved for weight loss. And while the injectables have been hugely successful, there's been a lot of talk that an oral pill would provide a much more convenient option for patients. There are people who may be afraid of needles and they don't want to get injections. They would prefer to take a pill once a day instead to meet their weight management needs. And a pill form of the obesity drug is also much easier to transport and store because it doesn't require refrigerators, unlike the injectables. So this is really a crucial win for Novo Nordisk as it takes on Eli Lilly, its chief rival.
Yeah, and a Novo Nordisk that seems increasingly in need of a major win. Shares are down about 53% this year from the higher point a little bit earlier in February. Put this in a larger context for Novo Nordisk and whether or not this will turn its fortunes around.
Sure, yeah. This, as we see, it seems like investors are quite excited about it, judging from the after-markets trading. And this approval certainly provides a near-term, much-needed boost, a potential growth driver. But the execution of this commercial rollout of the obesity pill would be really critical. Eli Lilly, Novo Nordisk's chief rival, also has an obesity pill in the works. And the company has said that it anticipates an approval as early as March. So Novo Nordisk really only has a few months of head start to kind of establish this market and to take lead in this really critical oral market. And on the other hand, Novo has also really been under pressure on a lot of fronts, not just from Eli Lilly. It's battling the compounding pharmacies that are selling kind of legally gray area obesity drugs in the US. And there's a crop of newly emerging companies, and whether it's startups or big pharma, that's also eyeing this huge obesity market. So there's still a lot for Novo Nordisk executives to prove.
Well, thank you so much, Amber. That's Bloomberg's Amber Tong for your update there on Novo Nordisk, and something we'll be watching very closely at the opening of trade today. What else we'll be watching is an interview with the CEO of Novo Nordisk a little bit later today. He'll be on Bloomberg Surveillance at 1:15 p.m. London time. Don't miss that conversation. But coming up here, we'll discuss the impact of Russia's attack on Ukraine's energy infrastructure. The CEO of Ukraine's biggest private energy company will join us next from Kyiv, and this is Bloomberg. Well, welcome back to Bloomberg Daybreak Europe. Former head of Britain's spy agency has told Bloomberg that intelligence suggests that Vladimir Putin is not ready to end the war in Ukraine. The former MI6 chief Richard Moore spoke to the Michel Hussein show last month.
Our voice is one that is listened to in Washington. So things change, move around a bit. That's the style of the current administration, but we are always there, and it's our responsibility to use that to convey exactly what the intelligence is telling us. And it's telling us, for example, that Putin has no intention of doing a deal, that this is not an issue for him purely of territory. This is about dominating Ukraine and turning Ukraine into something that looks rather like its neighbor, Belarus. So all of that stuff we talk to the Americans about all the time.
So
and I think you can see sometimes the impact of
doing
that.
A deal, Vladimir Putin, if he has no intention of doing a deal, then how do you see this ending this
at the moment. So I don't think under current conditions that Putin. Well, I mean, I'm basing this on access as I had a few weeks ago to our understanding of the intelligence on it, and that is that he's not ready to do a deal. So for me, the answer to that is he needs to be put under more pressure. So he is prepared to do a deal. The president of Ukraine is clearly ready to do a deal. He's remarkably, in the pursuit of peace, prepared to give away up to 20% of his country de facto, and yet Putin is not. So what's going to change that? More pressure on the battlefield. Ukrainians have an undercapitalized defense industry. They have spare capacity that cash would solve. There is more that we can give them. There is more that we can give them in terms of permission to use long-range weaponry, for example. There's all of that, as well as giving them the sort of, the basics of air defense and all that. And there's an opportunity to put a lot more pressure on Putin at home. And I don't pretend that is going to give immediate results. One of the things I would say in this space is we have to be patient. We have to be prepared to see this off.
The former head of MI6, Richard Moore, speaking to Michelle Hussein there. And we'll keep it on Ukraine and Russia. Russia is continuing to pummel Ukraine's energy system. This week, around 120,000 people in the Odessa region were left without power. And last weekend, a series of Russian missiles and drones attacks left parts of the region without power for several days at a time of the year when temperatures are always around freezing or below. For more on the power situation in Ukraine, we're joined by the CEO of the nation's biggest private energy infrastructure developer, Dtek, Maxim Timchenko. Thank you so much for joining us, speaking today in a very cold day in Ukraine and across the country in a very challenging moment. Can you give us an overview of what the power situation is today in Ukraine?
Good morning, Oliver. Unfortunately, just in these minutes, we are under massive attacks of Russians, and the major target of today's attack is power station. So, as you know, we been attacked only power station of the Dtek more than 6 times since September this year. And I believe that this coming winter will be the hardest winter since full-scale invasion.
And to try to explain to that a little bit further what it means to have the hardest winter, you've had many hard winters. Explain to us the sort of degree. What are we talking about in terms of power coverage across Ukraine? Can you quantify that for our audience?
Right. To make it simple, people already, even with the temperature around zero, staying without electricity for 15 to 20 hours in some regions of Ukraine. So more than 50% of our power generation facilities are damaged or destroyed since September. And definitely we have deficit of generation capacity. Russians attacking everything: generation, transmission, gas infrastructure, coal production, all energy infrastructure under constant attacks of Russians since September. And it's incomparable attacks in terms of intensity for the last 4 years. And as I said, literally these minutes, 2 of our power stations under attacks. We will see the outcome of this.
And how able are you to reestablish some of these links? I know from the very beginning of the war, your teams have been putting themselves in great danger to try to reconnect, to try to rebuild. Are you still able to do that? Is that becoming more and more difficult as more and more is being knocked out?
Yeah, absolutely. It's become more and more difficult because unfortunately we run out of stock of our equipment, the used equipment. Today there's the major problem. We have thousands of people working on the site after each attack. But the problem is that we don't have additional transformers or generators or turbines, and this is what we need now. We don't have time to place it in production. For this winter, we need to find used equipment. That's why our teams traveling across Europe to decommission thermal power stations to find any pieces of equipment we can bring back to Ukraine to restore power station as soon as possible. So today, what we need, number 1, air defense, number 2, used equipment, and number 3, funding of this equipment.
And are you getting some, in conversations with some of the leaders from the Commission, from other sort of forms of investors and businesses, are you finding the support that you need, or does that effort need to be stepped up massively, just given the size of the situation that appears that you're dealing with at the moment?
Yeah, absolutely. We are very grateful to all our partners for this constant support we have since February 2022. Unfortunately, not everything can be done in such a short period of time as we need it, but definitely we are in very close communication with the European Commission, Energy Support Fund, with our partners from the United States, not only for supply for the coming winter, but also for mid and long-term solution for Ukraine. And this solution is in distributed generation, in solar, wind, battery storage technologies, which make us much more resistant.
Yeah, and I want to talk about that medium-term solution. Obviously, there's the immediacy of this winter, but there's also, we've talked about this in the past, your efforts to redistribute kind of how power is generated. It's very easy to knock out a coal-fired power plant. It's much more difficult to get a distributed grid down. How are your efforts in building out that solar and wind capacity? Has that been helpful to your efforts in trying to keep the lights on in Ukraine?
Yeah, absolutely. Today, we can, based on our own experience, compare how resistant is solar farm and coal-fired power station. To restore the same capacity for solar or wind power station, we need days. If you're talking about coal-fired, it's about months or years. That's what is happening now. That's why we made a decision to continue construction the largest wind farm, not only Ukraine, but in Eastern Europe. Just in September, we commissioned the largest battery storage system, which is extremely important for resistance of our power grid. And in general, investing more in renewables seen from energy security rather than climate change. But it gets both.
And I also want to talk about some of the longer term. So we're talking about the medium term, the immediacy, but longer term reconstruction, the dialogues that you're having with partners from outside of Ukraine, whether or not you're able to attract that investment for a sort of day after. I know there's been a lot of discussions, including with President Zelensky and the head of BlackRock, the Treasury Secretary. Are you part of those discussions? Or is there investor interest in trying to rebuild Ukraine to make sure that it has power in the future?
Absolutely. We didn't stop these discussions, and basically our position that recovery of Ukraine started from the new projects we and other investors in Ukraine realizing since 2022. So today we are building so-called coalition of the willing to quickly restore power system in Ukraine, to build even bigger wind park in Ukraine, which we developed for 3 years, and now it's ready to go. Also, we're offering projects in energy battery storage. We're offering project to our American partners to drill ultra deep wells to unlock huge potential in gas production in Ukraine. So all these areas in energy sector open for partnership. And this is basically a philosophy of our company, be one of the preferred local partner in Ukraine to, as I said, unlock huge potential in energy sector of Ukraine.
And as we speak, you know, there are these negotiations happening at the highest level to try to end the war in Ukraine. Can I just end the conversation by asking you how optimistic you are that President Trump and the U.S. administration will be able to bring this war to an end in these negotiations with Russia and with Ukraine?
So probably it's hard to say about optimism. It should be just and lasting peace. Security guarantee is extremely important, especially for investment we just discussed. So I can understand all international partners asking about security situation in Ukraine. And I think that part of this negotiation should be economic development of Ukraine under strong security guarantees which we need. So I hope that all this negotiation and leadership of President Trump can bring us to the peace. But as I said, it should be just and lasting peace.
Well, Maxim Timchenko, the CEO of energy infrastructure developer Dtek, thank you so much for joining us this morning from Kyiv. And just to sort of illustrate the situation there, Kyiv today will have a low of -8 degrees. Tomorrow it will have a high of -7 degrees and a low of -9 degrees. That is just illustrating how cold it is as all these sort of blackouts rip across Ukraine. Now let's get to some other stories that are making news elsewhere. Shares in offshore wind companies slumped after the U.S. announced that it's suspending all 5 wind farms under construction off the East Coast. The U.S. Interior Department cited national security concerns, saying that massive turbines may interfere with radar systems. And new car registrations in Europe ticked up for a fifth straight month in November, putting the region on course for a fourth year of gains. According to the European Automobile Manufacturers Association, buyers registered 2.5% more vehicles from a year earlier, led by growth across electrified models. Spain and Germany recorded the biggest gains among the major markets. And UK businesses are ending the year feeling more upbeat about the economy's prospects after being spared much of the tax pain from last year's budget. Lloyd's Business Barometer rose to a net balance of 47%, with optimism over the wider economy hitting a 4-month peak. It comes despite figures confirming that the economy slowed sharply in the second half of the year, with forecasts warning it could contract in the final 3 months. Plenty more coming up. This is Bloomberg.
If we don't adjust policy down, then I think that we do run risks of rising recession. The unemployment rate has poked up, potentially above where people thought it was going to go. And so we've had data that should push people into a dovish direction.
That Fed Governor Steve Myron there speaking to Bloomberg Surveillance a little bit earlier yesterday, and getting into the end of the year and then the end of the show today. We're going into some of the sort of charts we're paying attention to. The global stocks near a record high today, just a couple of points shy away from a global high after what was a very turbulent year for world stocks. Remember, reaching the low there after Liberation Day back in April, but has just stormed ahead into the end of the year and just a shy of an all-time record high. And that's not only the only place where we're seeing record highs today. We're seeing, of course, in gold, another session of positive moves for gold, up almost 70% in the year, 71% now as we close in on the year. That is along with all the rest of the commodity complex across metals. We've seen a similar story in silver, similar story in platinum, and copper giving a little bit some of that back today, but really overall just a very tremendously positive year for metals across the globe. And ending the year also on another issue that we have been dealing with, particularly in Germany, which is European bond issuance. You'll remember that also at the beginning of this year, we had a major shift in European policy in the Bundestag within Germany, saying that they would release the debt brake for some spending. That is going to unleash literally hundreds of billions, if not trillion, more than €1 trillion of spending. And what we have seen this year is European bond issuance begin to just absolutely skyrocket. €2.54 trillion in European bond issuance. That is both sovereign as well as corporate. But going into next year, we're going to get a record from the German government. They will issue more than €500 billion worth of bonds going into next year. And that is going to be seen really by most analysts as the big catalyst, the big driver for growth in Europe, really looking for the Bundestag and Friedrich Merz to help bring that turnaround here in the German economy and, of course, in the European economy more broadly. But going into the session a little bit later today, European futures down basically a couple of points, more or less flat for the day. That's it for the show today. The opening trade is next. This is Bloomberg.